Welcome back. Today we are undertaking a critical, focused analysis of NUBURU Inc., ticker BURU. This is not a typical stock review. We are examining a company attempting a radical strategic transformation. We will dissect its performance over the last 24 hours and, more importantly, conduct a deep fundamental analysis to assess its future viability. In the last trading session and the hours that followed, the NUBURU stock experienced a period of consolidation. There was no fresh, market-moving press release, which is common for a company undergoing a major restructuring. The price action has remained in a tight range, holding stable near the 20-cent level. This lack of panic selling suggests that investors who bought on the news of the recent funding are largely holding their positions. Volume has been moderate, confirming that the market is currently in a wait-and-see mode, digesting the previous strategic updates rather than aggressively buying or selling. Technically, the stock is just confirming that the crucial battle for its survival is centered around key support and resistance zones, which we will detail shortly. For BURU, the future outlook is defined by its fundamentals, which are split into two stark realities. The first is the company's current financial health, which is the primary source of risk. The company is, frankly, in a precarious position. Its legacy Blue Laser business contributes very little. The TTM trailing 12 months revenue is negligible, below $1 million. This translates directly to negative profitability, continuous operating losses, and severe negative cash flow. This weak financial footing exposes the company to extreme risk, including the threat of further share dilution, which hurts current shareholders, and the ever-present danger of delisting from the NYSE American exchange. The second reality is the strategic pivot in future growth, which represents the entire reward thesis for buying this stock. Management is moving the company into three high-growth, high-margin areas. First is the Tekne S.p.A. acquisition. By aiming for a 70% controlling interest, NUBURU gains immediate access to Tekne's $500 million order pipeline in the defense sector. If this acquisition is completed, it instantly transforms NUBURU's revenue profile and provides a ready-made global client base in NATO markets. Second, the Orbit SRL acquisition is crucial because Orbit provides a SaaS, software-as-a-service platform focused on cybersecurity and operational resilience. SaaS models are highly scalable and command much higher profit margins than typical industrial hardware, making this a vital fundamental shift towards profitability. Third, the planned Maddox Defense joint venture places the company in the rapidly expanding defense drone and UAV systems market. These three strategic plays are the only fundamental drivers that justify the stock's current valuation and the hope for significant future gains. Looking at the future catalysts, three events will determine the stock's direction in the coming weeks. The most immediate is news regarding the Italian network contract that Tekne is pursuing. Securing this would be the first tangible proof that the new strategy is generating revenue. Second, the market needs confirmation of the Italian Golden Power regulatory clearance for the acquisition. This validates the deal's importance and removes a massive regulatory overhang. Third, we must monitor the successful execution of the remaining tranches of the Tekne financial program, as these show the company is meeting its financial commitments for the pivot. Given these fundamental pressures, monitoring the technical levels is absolutely essential. The stock is in a fight for survival. The do-or-die support level remains firmly at the 12 to 15 cents range. A clean break below 12 cents would trigger panic selling and indicate a failure of the current strategy. Conversely, for the bulls to win, the stock must decisively break the 25 resistance level. Only a high-volume move and sustained trading above 25 cents will signal to the market that the fundamental future is actively being priced into the stock. In conclusion, NUBURU is a classic binary stock. The risk of failure is high due to its current financial health, but the reward of a successful defense pivot is substantial. The stock's future relies completely on the successful execution of its strategic goals. Keep a close watch on those contracts and regulatory announcements. Thank you for watching. We'll be tracking NUBURU closely. Let us know your thoughts in the comments below. Disclaimer: This video is for entertainment and educational purposes only. I am not a financial advisor. Please do your own due diligence before investing.